Alrighty, welcome to a new weekend, another weekend, another Friday evening here. It's 5 o'clock, so London is closed, and I'm going to do a video. And as usual, I'm going to go through the markets, and I'm going to take, excuse me, I'm going to zoom out a little bit and take a kind of a holistic view of what's happening. To kind of wrap up the week. You kind of get caught on the daily action, you kind of get caught in a very myopic state, low down, deep down in the action. So it's time to kind of unwind and take a deep breath. And with that kind of introduction, whatever the hell that meant, I'm going to start with the FX market, and this is euro dollar. And I'm watching this three-wave decline, and I'm watching that alternate count, and that's what's happening this week. Shall I move on? No. Okay, so I'm still working on the idea that we've got a second wave complete with a series of 1-2s off that. There's a couple of ways you can view that action over the last week. I'll get into that in a second on the hourly chart. We're kind of coming to a halt today. Over the last few days, we've pretty much been stuck in a 50-point range, or even less. So I'm sticking with the current wave count with a good hat tip towards that alternate, and I will tell you why in a second. But so far off the extreme low, we've got a three-wave rally. So we could have a complex correction there. We could have 5 waves yet to unfold also. But I won't really switch. Technically that alternate count doesn't get triggered until we break that wave too high there at 115.15. So for now it's pretty safe. We're still got a downside bias though. I do realize that bearishness on the euro right now is quite severe, so maybe there'll be a clearing rally. So that's the kind of the larger take on euro dollar. Let's get into the hourly. You can see that three-wave rally is underway. There could be an expanding wedge. I had thought that it might be a diagonal, ending diagonal. See, we've got a crossover here between this corrective action here and this previous high. So, I mean, there's also the idea that this is 3 waves up in an A, this is a B wave underway, and then we'll get a larger C wave. Up to that would bring us up to about the 62% retracement. That would be about 114.50. If that was the case, well, I'm quite open to that too. I just like this as a 3-wave decline. Immediately as you look at it, it just looks like a 3-wave decline to me. So that would make it a B wave. So either way you look at it, we're still stuck within a correction. I don't see. There's also the idea that we have a further wave 2 there, which would kind of replicate that second wave high. So it could be an expanded flat wave 2 at a lower degree. It could be a large flat wave 2 at a higher degree there in green labels. Or it could be a second wave in pink, as shown. But for now, we're still looking at a second wave correction, no matter what. I think, however it unfolds, it's a second wave at 1 degree or another. For now, still looking for that wave C to complete. It looks like we're pretty corrective here, and we may have started a final wave up to complete wave C. A break of 1370, 113.70 will confirm that. But for the 50% retracement of the drop off the high there is at 114.13. So if this is one final pop higher, that should complete by Monday, and we should head down again into a third wave, with the caveat being that there is the alternate counts there. Okay, so that is euro dollar. Here is pound dollar. Similar situation, we've got this alternate count here. The rally off that low can be viewed as 3-wave, but it does fit as a 5-wave also, so we could be going for a larger 5-wave move higher in a second wave, and that would close out this whole corrective process since August last. That's been a long one. August 18 through to whatever, late February, March. March 19, so you've got 8 months of well, what's that? 7 months of correction there. If this does trigger the alternate count, then we've got this trend channel here. We've got a 3-wave move up in an A, then and probably an expanded flat wave B, because I like the fact that that's a 5-wave decline. I think it's a clearer 5-wave decline than anything else. And then that would be 3-3, and then you'd expect a 5-wave up to complete wave C. Although again, that could be another 3-wave move, so we could be looking at another complex correction. This could be a triple combination. Wave 2 in red here. So if it is a triple combination, I mean, it does fit. It's horrendously complex, but then again, what's happening in the UK is horrendously complex anyway, so that fits. Okay, let's get down to the hourly chart. Yeah, so that's the if we got a pop higher above 132.18, well, that would trigger this alternate count here, and there's that trend channel there. So it's not even much higher than where we are at the moment. Maybe 133, 133.50 to complete that larger alternate count. And if that was in 3 waves, then this would be a B wave. Let's get our scribbler out. I hope everybody's doing well. Okay, get rid of you in here. You could be talking about a larger kind of a 3-wave move there to complete a, like I said, a triple combination. It would be. It's got to be up there as one of the most complex corrections that has ever occurred, given that internal B wave. But anyway, we have a high in place. We have 5 waves down, and I just want this 3-wave correction to complete. We had a move down off the high earlier this week, but that's been retraced, so that has been confirmed as a 3-wave decline. So we're most likely looking at either this is wave A up, and we've completed wave B, and we might get a push higher in a C wave. We don't even have to break resistance. If we do, we'll trigger the alternate count. But for now, this is what's... you may as well work within the framework that you've got, rather than completely changing the whole time. It looks like that. It looks like we'll at least hit that 78.6 retracement, and we almost got there with that A wave. And wave C should break that. And if the current wave count is to hold, then we've got to turn lower before 132.18. So 132.18 is still the level to watch, and to close out this second wave. Okay, dollar yen. We've been stuck in a little correction, sideways correction, more or less a B wave all week, and I should actually move down off that. It's a 4 hour. More or less a sideways correction in B wave, and we should get a 3-wave move to complete that. Again, lower degree correction. So I'm looking at 1, 2. I'm actually. Excuse me, I changed that during the week, and I never changed the 4-hour chart, so I'll do that right now. 1, 2. So 1, 2, 1, 2, and a lower degree 1, 2 pattern now closing out. So I'll show you that lower degree here. So you can see that 1, 2, 1, 2, 1, and now we've got maybe a triangle B wave. It might be like an ascending triangle, or a barrier triangle if you want to call it that, and then to head down to fill that channel again. So it still looks like we've got a 3-wave correction to complete here in wave 2, and then we would look higher. I'll be looking higher into a 3rd wave, and it'd be a third of a third of a third, so it could be quite a rally if this is to play out. We've got 50% retracement here at 109.85, so we've got the previous 4th wave there at 109.66, so that's a decent little kind of band of support there. Initial support is at the A wave low, so initial target, or the minimum target, let's say, would be 110.24. Okay. And that would complete 3 waves, and then we should head higher in a 3rd wave. Okay, let's get to the stock market. We're stuck. Again, we're stuck at the highs. We've hit this kind of resistance level at the 26,000 level again. I cannot let go of my 2nd wave high. I still think it fits, but a B wave also hits, so it fits. So it's a 50-50 right now. I did have a bit of an interesting thought during the week there, which I haven't revealed to anybody. I must have been ashamed of it. If this 3-wave decline is possibly a further 4th wave, I'm showing a 4th wave here, but this 3-wave decline could also be viewed as a 4th wave, and this rally here, if you unfolded it in a 5-wave pattern, even if it doesn't break to a new high, it could be wave 5 complete again. So we could be talking wave 5 here. I'm not averse to that at all, actually, to be honest. But we are running out. We have run out of steam, more or less, on the rally. So, excuse me, it's not likely to make a new high. And if that's a 5th wave, well, then it may be a failed 5th wave. And that was the thought I was trying to get to there. I was trying to root through my brain there for a second. A failed 5th wave in wave 5 brackets. That's an interesting thought from my point of view. That's a very interesting thought, and it would portend a decline anyway. So we've got, if you want to look at 3 different setups of failed 5th wave, a B wave high, or a completed 5th wave, and we're working on a 3rd wave down. A few ways of looking at that all point to the downside for now. I can't. There is no way in my mind, no matter which way I split this, I just cannot see a new bull market rally to continue. I can't see 30,000 like everybody's pointing to right now. You just know that there's, by the end of the year, that people have targets of 30,000 on the Dow, given the level of bullishness. But that kind of second alternate count would be one to watch also if we have a failed 5th wave. I'm surprised that I am quite open to that right now. Forgive me, I'm just talking to myself now. Okay, so get down to the 4-hour chart. We've got that we're bumping up against these previous resistance. We can call wave 2 at that high. We can call wave 2 at the previous high. We could. We had a little drop yesterday. Nothing to write home about, and we've retraced a lot of that today. So it looks like that again. That high will be taken out. But we can at least call this a B wave high, and for a crash in a C wave, and it would be a crash. I think we'll probably break. Is that the previous 4th wave low? Down around the $20,000 level again. Maybe even worse than that, because if you take a C wave, A wave relationship, if I can actually get that to sit in the right place. We're talking 100% would reach 20,600, and the 161.8 would reach 17,200. And given the level of extreme bullishness that is in the market still, we've actually got higher levels of bullishness on many readings. We've got higher levels of bullishness than we had at the extreme high back in October. So given that bullishness, it's not beyond the realms of possibility that we would reach that 17,000 level in wave C. Again, we're at the highs now. We need a signal off that high in the form of 5 waves down, which we just haven't had yet. Okay, and I'm losing my voice this time. Instead of dropping octaves, I'm losing my voice. Okay, so let's get on to gold. We had that push up in a 5th wave, and it now looks like, well, a push up to begin a 5th wave. It's wave 1 and 2, I think, of 5. I think we should push higher above that 1365 level to complete wave 3 in green in square brackets there. So you can see here we've got wave 1, 2, and we should be working on wave 3 soon enough. I think next week should bring in wave 3. We've had the correction that we were looking for, back down to the more or less the B wave high there. We didn't reach the trend channel line. I mean, this could break out to be a bigger, like a more complex correction in wave 2. We could get 3 waves, 3 separate waves back down into this trend channel line again. We won't know now until next week, obviously, but I do like the fact that we've got to bounce off that low there. That was the previous 4th wave low. We're coming in around the highs of the previous wave 3, and we've got this previous wave B, so it's a nice support level, some nice support levels there, and we've got a bounce in price off that. And it looks like we've got a triangle, it looks like we've got a 3-wave decline. If I take me a little scribbler there, I can see a triangle, contracting triangle here in a B wave, so I'm calling that wave B, and then a 5-wave move lower off that in wave C. So we've got a 3 triangle and 5 ABC correction there. And then again, like I said, that could be just a of the 3-wave decline, so we could get an even larger 3-wave decline. It really depends on the move off this high here, off the low here, and to see if that 1320.77 low holds from here. So tentatively looking higher in gold next week for a rally up in a 3rd wave, wave 3 of 5 of 3. And you can best view that on the 4-hour chart there. So we have wave 1, 2, 1, 2, 3, 4, and now we're working on 1, 2, 3, 4, 5. So a 5th wave, an extension in 5th wave, most likely. Okay, let's get on to crude oil. What I've been toying with this week is either we have wave C completing now. We can see that the price is hitting that upper trend line, and that upper trend line actually, that upward sloping trend line connects the 4 previous highs. So we're hitting some sort of kind of a psychological barrier here. We're approaching the 50% retracement of the whole decline, so that's 59.56, and wave C has now hit, if I get my Fibonacci extension, if wave A, and we have 50%, wave C has reached 50% of wave A right now. And of course there is an extreme bullishness again at a 2nd wave high on display in the oil market, on the commentary in the oil market anyway. what the market does from here is another thing. There's another idea that I've been toying with also, which shows wave C as a wedge, an expanding wedge. So a five wave move in there off a bit, 3 waves up in wave A, 3 waves down in wave B, and then an A, B, C, D, E 5 wave move. We're kind of treading along that upper trend channel line there. So there's some key levels within this final move that I will look at right now. We get back to our current count. So that's something to take note of next week, especially if we get an impulsive turn down. We could have wave C complete in wave 2. Got a pretty weak momentum. It's not looking, bullish by any stretch of the imagination. We're kind of falling back down into previous price territory. We might be spiking to new highs, but we're really falling back down into these price territories again. We're overlapping, and overlapping moves does not a bull market make. Here's that alternate count there, that wave A high, wave B low, then 5 waves in an expanded wedge. You can see that within the red trend lines there. For now, I'm kind of sticking with the idea that is a B wave low, and then we're moving higher in 5 waves in wave C. And we've got resistance there at 58.13, and that is a lower degree 4th wave within wave 3. So it should, what it seems to be anyway, keeping the price, from breaking out in any way, shape, or form. There's hardly a way that you can count this as a bullish pattern at the moment. Even the 3rd wave there is very subdued. This overall move here could be a 3-wave pattern, and if that was the case, well, then the wedge idea for wave C would fit better. So it would, because you'd be talking about 5 internal moves of 3 waves. So you would go, if that's wave B low, you'd go A, and then B, and then maybe C, and then what was that? Sorry, A, B, C of D, and then maybe an A, B, C of E. Okay. My scribbling on I'm starting to think my scribbling on the chart isn't helpful at all. We have here 53.48 as a previous 2nd wave. So if I'm counting a 3rd wave up, and maybe it's possible that wave 4 and 5 are actually complete. That's not beyond the realms of possibility at all, especially if we start breaking back below 56 again. That previous 4th wave there at 55.60. So if we break 55.60, that's going to be a bit of a downer on this bullish pattern, on the expectation that you'd see wave A and wave C reach equality, and that doesn't happen up until around 63, I think, is where I have that marked. Yeah, 63.60. That's where wave A and C will reach equality. It's still not impossible, obviously, but I'm not overjoyed on that interpretation right now either. So we've reached 50%. C wave has reached 50% of wave A on the alternate count. We could also have a 5-wave pattern complete at today's highs. So, and we're bouncing down. The price momentum has just died completely. Especially, you can see on the 4-hour chart here, the extreme high was way back within wave A there, back in the 10th of January, and we've just bounded along without much net gain really at all off that off that high. And you can see we've got this extreme diversion here now, and from the price, and the price just hasn't turned yet. So it's very possible that next week brings a turn, and if it does bring an impulsive turn lower, well, then we could be looking lower in a very large degree 3rd wave. And if it is a very large degree third wave, well then, watch out below, because we could be talking a break of the $30 handle in wave 3 down. Okay, we'll move on. The S&P is more or less the same as the Dow. The main striking difference is we haven't had a challenge of that previous wave 2 high yet. So the count is actually a little bit simpler. Things are a bit simpler with the S&P than they are with the Dow. We've had a move lower off that recent high. It's unconvincing yet because we've got a nice retracement today. I mean, if we sell off into the close, well then we've still got another 2 or 3 hours trading over there, so we could sell off into the close, and this could hold as a second wave. But this is all kind of very preliminary stuff at the moment. I'm looking for a larger move down. I want to see the price start to take out these previous kind of corrective lows there, 27, 28 level, and especially that third wave high there, that 26.75 level would be, the break of that would be awesome. It'd be bad for a lot of people, but it'd be awesome for me. Okay, so here I am, still on the hunt for the end of this bull market, and this hunt is going to go into next week again, obviously. But I am, let's say, I'm grateful that we haven't broken that resistance level yet, and I'll say that, and the next thing that'll happen is it'll rally up through that. Okay, we've got the market being at an overbought level, an extreme overbought level, since about the 10th or 9th, the first week in January, really. So we've been in a solid 6 weeks of overbought behavior, or overbought conditions in the S&P, with the kind of minor kind of relief corrections, and then a complete dive right back in again into the bull market, as what people perceive to be the bull market anyway. But it's been a real kind of slowdown in the power of this rally ever since, we could say, the third or the late second week of January. So we've, for the last month more or less, we've been slowing down and just grinding to the upside. There's been no real breakout per se, and we're still below the previous highs, and they would be interim highs, so either second wave or B wave highs. So it's not looking good at all whatsoever for the stock market. And even on a daily level, we've on this second degree lower, like a second derivative of a second wave, is lower degrees by 2 of the previous high. We've had higher levels of bullish behavior, or overbought levels in MACD than both previous all-time highs, and that should tell you something. What happened the last time, my friends? We're not going to break out to new highs here. I really don't think we are. Even if this is wave 5, I mean, this could be a failed fifth wave, and nothing would please me more than a failed fifth wave, because it would be the irony of ironies. It would fit so well with the irony of the market right now. Okay, so next week it's the same job, looking for a larger degree sell-off in 5 waves down, and that's what I will stick with. Okay, let's get on to silver. We've got our move higher off the lows in silver, and I think it's a beginning of a third wave up. We have a nice, we're starting to build, rather than a challenge resistance, we're starting to build support levels at these previous lows here. So that is a good sign. And I'm looking for a third wave up, and we may have completed wave 1 and 2. There's there is a chance that this rally, the most recent rally, is a B wave rally, and we'll get a larger, let's say, expanded flat wave 2. If that was the case, that would be 3 waves down, 3 waves up, and then a 5 wave decline, most likely into that previous 4th wave again. So 1518 again would be the level, the most likely support for that, let's say, alternate view. Okay, so let's get into the hourly chart. You can see that wave 1 high here, possible wave 2 low there, and a possible 5 wave move up off the low. We broke to a new high and then corrected. Not too sure whether this second wave is complete just yet. We've had a little bit of a rise today. It doesn't look impulsive in any way, shape or form just yet. It looks more like a 3 wave rise, so we could be talking about a larger correction in wave 2 to complete next week. And it shouldn't take long next week, actually, most likely by maybe Monday evening. If this evening's declines continue, it would be done by Monday evening, and that would bring price back down into that lower trend channel line again, and that's the support channel the whole way up. The other idea that I mentioned there earlier would be that this is 3 waves down in A, 3 waves up in B, and then we'll get a larger move down into that 1518 level in an expanded flat pattern for next week. I'm going to watch that rising trend channel line. Obviously, if we break that that double top there again at 1618, that will indicate that wave 3 of 3 has begun, and we can expect a nice acceleration higher in a wave 3 of 3. If this wave 2 is to extend a little bit, we look for somewhere in about the 1560 level. Support should hold, 1548 should hold, and if we get a larger wave 2 down, maybe about the 1560 level to complete. I should draw that in right now. I should learn a song to sing while I'm doing this to keep people entertained. Okay, and that would be the idea for a larger wave 2. Okay, so the trend channel, at least expect that trend channel to hold, and we'll find our way out of this correction in wave 2 up into the third of a third wave up. Okay, and let's get into Treasuries. Treasuries has been a little bit confounding of late. A possible expanded flat wave 2 here, triangle wave 4 or wave B, expanded flat wave 2, we could be moving higher into a wave 3 of 5 or a wave 3 of C. We've come higher today off that little decline in that was most likely a 5 wave decline in a wave C of 2, excuse me, and we've popped higher again. So a third wave up will be confirmed with a break of 122.35, and then we'll work to complete this wave 5. So if this is the wave 4 triangle low, we'll work to complete that wave 5 of C to complete wave 2, and that would be up there around resistance again. So most likely up around the 123.50 level. Man, I do not like MetaTrader 5. Okay, and it's an extended pattern, no doubt about that. But we are at the end of this now. There's even a chance that that this contraction in range will be broken to the downside as well, because you can, although it's hard to read, obviously, you could look at particularly this decline here as a 5 wave move more than a 3 wave move. And I mean, if that's the case, well then all of these moves are 5 wave moves to the downside. and then we won't get a break of 122.35, and we will get a break lower of support. I think if we get below 121.64, and most definitely 121.05, excuse me, 121.05, that confirms the idea that we're turning lower into a third wave, because this will be a series of 1-2 waves to the downside again. So we're kind of like, it's obviously when price contracts like that, you're just the options. Let's say the range of options tend to narrow, and your points of invalidation come nice and close. So two pretty solid ideas, and a slight move either way will rule out one or the other. And anyway, even if we do break higher, I think we'll complete this fifth wave pretty soon. Possibly, well, most likely below 124. Okay, and that has done it for this weekend. I wish you all a nice weekend. Have a good one. Have a beer for me. Enjoy your weekend. Be good. God bless. Bye-bye.